So it's been officially reported that for the second quarter of this year, GDP growth came in at negative about 1%, which, if we go by what has always been the most commonly used definition of recessions, that technically puts us at two consecutive quarters of negative GDP growth here in the United States, which would normally be considered a recession up until apparently this year. So, in today's video, I'm going to talk about why many people, especially the media, disagree with the notion that we are in a recession right now, which, to be fair, there are actually some good arguments to be made for that, but I want to dive a little bit deeper into that discussion, share my personal thoughts on it, and I also want to talk about what this means for the stock market going forward as an investor. So it should be a fun one. I hope you guys enjoy it. Let's get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Okay, first things first, let's go ahead and start by taking a look at why people are arguing and debating whether we're in a recession right now. I'll share my personal thoughts on that. And then we'll transition over to what I think all of this means for stocks going forward. Okay, so why are people saying that we're in a recession right now? Well, the first quarter of this year was a decline in GDP of 1.6%, and we just got our second quarter numbers in too, and that was another drop of 0.9%, so almost 1%. And the thing is that throughout all of history of tracking recessions, this has always been considered the general definition of how you classify a recession. And if you've been living under a rock, or you just don't believe me for saying that, you just don't trust me, well, all you have to do is type in definition of recession into Google search yourself, and you'll see right there the Oxford definition. It states a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in two successive quarters, which is exactly what we just saw. And you can see that here on this chart. And if we look at a chart of past recessions, by the way, we can also see that there is literally no other time in all of our history of tracking recessions where we saw two consecutive drops in GDP and it was not classified as a recession. Every single time was always classified as a recession, including 2020, by the way. We didn't put like some asterisk on that or make some kind of excuse because we were doing lockdowns and manually closing the economy. It was two consecutive drops and everyone called it a recession. But I guess this time is special, at least according to the media, because if you simply Google US recession, you'll see literally every single media outlet refusing to call this a recession. This has always been the most common general definition, and yet you won't find like a single media outlet calling this a recession. I mean, just look at this. CNN, US economy contracts again, fueling recession fears. AP News, U.S. economy shrinks for second quarter, raising recession fears. Reuters, U.S. teetering on brink of recession as GDP contracts in second quarter. We can scroll down even more. Time, what is a recession, and is the U.S. in one? Yahoo Finance, the U.S. isn't in a typical recession. BBC, U.S. economy shrinks again, sparking recession fears. Sky News, fears of US going into recession as economy contracts for second consecutive quarter. And the list goes on and on like that. Now, to be fair, there have actually been recessions in the past that did not include 2 quarters of negative GDP growth. So, that's a good argument right there. Again, every time there was 2 consecutive drops, that was for sure labeled a recession, but not every recession had 2 drops. So, if that's the case, that is a pretty good argument to make. But then who is making the official call on recessions and what criteria are they using? And can we explore that a little bit? Well, that's being done by a group of economists called the National Bureau of Economic Research, who happens to be funded by the government and by large corporations. And their definition is, I would say, conveniently very vague, stating that a recession is a significant decline in economic activity that is spread across the economy and lasts more than a few months. And it's typically based on things like employment, prices or inflation, inventories, output consumption, and all sorts of different variables like that. And so I guess you could argue that because it's less than a 1% drop in GDP, that it's not really severe enough to classify it as a significant decline in economic activity. But I mean, if you look at some of these variables, it's hard to say that the economy is not being, like heavily damaged right now and, certainly in decline. I mean, take prices, for example. The inflation measured by the Consumer Price Index is currently at a 4 decade high. Granted, it's being blamed on the Ukraine situation and on gas prices and on supply chain issues because of the pandemic and on other things that are claimed to be temporary, but that doesn't change the fact that it is being felt by consumers right now, which do drive the economy. Speaking of which, we know that consumers make up over 70% of the economy. So, what do they have to say about all of this? Well, currently, consumer spending is still at record highs, but that's in large part because of all the insane money printing and stimulus that is being, has been given out to people that is also giving us our record inflation in the first place. And they're also borrowing a ton of money that may not be easy to pay back since consumer debt is also at record highs right now with a sharp increase. So that spending may start to crash, especially considering how low consumer confidence is right now. Because not only has it already crashed to lower levels than even 2020, where we literally shut down the entire economy, which is crazy to think about. Like, consumers were actually more optimistic about the economy at a time when everything was shut down and we told people that they're not allowed to work. They were more confident back then than they are now. But besides that, it's also lower right now than even the Great Recession. That's pretty crazy. And I know this whole recession debate has started to get, pretty political these days, but even more than half of all Democrat voters are saying that they think that we're in a recession right now. So even Democrats think that we're in a recession. And when looking at Republicans, independents, and all voters put together, there's actually more of them that think that we're in a recession right now than there was during the 2020 disaster, which again, we literally classified that as a recession. So with negative GDP growth, economic confidence also being near the Great Recession levels, inflation at record highs, and now we even have layoffs starting to rise around the country with jobless claims at the highest level this year and with companies laying off over 32,000 people just in June alone, which was a 57% increase from May. How is that not being considered a recession? Well, okay, the counter argument is that a lot of this is temporary, and in the meantime, unemployment rates are still pretty low and around the same levels as before the pandemic, which I admit, that's a good argument. I mean, people are still, for the most part, largely employed and making money. That's a good thing. But my issue is that that doesn't mean that we're not still declining as an economy. And with such high inflation, your income is not as valuable as you might think it is. Altogether, if you force me to make a call here on whether we're in a recession or not, I'm sticking with my standard definition that I've always personally used, which is 2 consecutive quarters of negative growth. And so, if you were to ask me, I do think that we're in a recession right now because it's pretty clear to me that the economy is in somewhat of a decline. Now, that might be a small decline to the point where it's maybe not large enough to where we should use such an extreme term that has so much, power behind it as something like a recession, but I still personally just consider this one. And even if we're not in a technical recession by some people's definition, well, I think that we're still going to see people tightening their budgets, and we're already seeing a lot of that. I have a lot of friends and family that are trying very hard to spend less and save money. They're very worried about the economy, and that's going to eventually lead to a very real and more significant recession. So, at the very least, I think that we're going to continue to see the economy and also the stock market be very volatile here, at least in the kind of short to medium term. So, what does this mean for stocks and for us as investors? Does my strategy with investing change at all? What are my thoughts on stocks? What will I be doing? How do I plan to navigate this type of environment that we're in right now? Well, for me, I would say that personally, nothing changes with my investing strategy because as a long-term investor, I like these kind of volatile times in the stock market. During these times is when we see some of the best deals. And we've already seen many great companies and their stocks completely crater and crash recently, and that may continue to be the case for some time. I think we'll see some ups, we'll definitely see some downs, and I'll be looking to increase my buying every time that stocks are falling. That's just my strategy as a long-term investor. I've never been of the mindset of trying to time the market or trying to find the absolute bottom of a particular stock. Because if we look at history, it tells us that that has never really been a smart thing to try to do. Because, for example, if you look back at the Great Recession, here's a combo chart, and on the top chart, it shows all the stocks on the New York Stock Exchange and when they hit their lowest lows. And then on the bottom chart, it shows the S&P 500 index. Well, what we can see from this is that most stocks actually hit their lowest bottoms in October of 2008, which is what we consider to be the overall stock market bottom of the Great Recession. And the S&P 500 index hit its lowest bottom on March of '09. Yet we know that the economy itself didn't start to grow again until July of that year, and even the unemployment rate didn't reach its bottom until October of that year. In other words, the stock market bottomed a full year before the economy had even started to recover, and that's with unemployment way lower than where it is today. So, considering that the S&P 500 is already down almost 15% right now, the Nasdaq is down almost 25%, and literally tons of individual stocks in the market have lost way more than that, sometimes like over half their value. Well, I just think that stocks are actually, a lot lower than we might want to, realize, and there may actually be some pretty good value and discounts in the market. So I just think that my same strategy that I've always used of buying stocks when they're falling and holding them long term, I think that that remains the best strategy overall. And look, I don't have anything against short-term traders or swing traders or anything like that. If you feel that you can predict that kind of stuff and time the market, by all means go for it. I wish you the absolute best. Short-term wise though, I absolutely suck as an investor. I mean, I really am horrible at predicting things short-term. And you guys know this, you watch my videos. Many times I buy a stock and it goes down in the short term. Long-term wise, I always do a lot better, and I show you that on occasion when I show you my portfolio and I show you how some of my stocks are up like, hundreds of percents. That's because I've been holding those long term and I've bought them when they were at some of their lowest prices, and I increase my buying as they fall. And then I look to hold those stocks, 5 to 10 years out, or in my case, I like to hold them even longer than that. So that's my strategy. And I just think that it's the safest, most rational, easiest to predict kind of strategy to use. So that's what I go with. But I'd love to hear what you guys have to say. I welcome all opinions and views, and I know we all have different strategies. That's the beauty of the stock market. We can all be doing our own different things and trying to find success with our own strategies. So what are your strategies? How do you feel about this? Do you think that we're in a recession right now? Do you think it's being overblown? I'd love to hear your thoughts, and I welcome, again, all views, all opinions. I know it's getting a little political, but I love everyone regardless of what your views are, and I'd love to hear from you, and I'll try to respond to as many comments as I can. But thank you so much for stopping by, for all the support. Please hit that like button if you did enjoy the video. It means the world to me. Now I'll catch you in the next one. Take care. Bye-bye.